Well, here it is. Time to wrap up another day. We're going to bring September 15th. Good morning, everybody. Hope you had a great weekend. It was a fabulous one there in trade. It was still to the wrong side all weekend long. For that is low humidity. I mean, temperatures in the 70s, higher lows, and hard to beat that. Not much news out around the globe. All was quiet. You're going to see a pretty clear peak in Iraq and the Ukraine and Russia. Up until Iraq after lunch, joined the list of right there. Yeses or outright no's. Turkey has said low trade. You can no bombing comes to balance from any air bases in Turkey. That's really amazing too. They're a NATO ally. Battle of the Middle. Mom is what we call them. They're openly supporting. Do not want to trade resistance. Sell of crude oil. They said they will not almost made, and maybe we did sell of ISIS crude oil either. Iraq said that they will not approve. Very quiet trading. The FOMC meeting tends to put civilians on hold, and I think that's what we're looking at. Structures where ISIS might be hiding, and what do all of those groups do? They put women and children because of fighters. They fight from schools. Bad support for the market. We saw it off this morning's bad news. England and Australia have given a tepid response on the buy side, the sidelines. So supposedly the United States will be flying what missions they can fly. On a downtrend right now. The issue is, does the 60 area, the 65 area hold up right here? Or so does the 70 area give and take? It's a strange situation is holding up. Where thank God, really good support in the 60 to 65 area with an alligator, and you hope like the last one to get eaten by the alligator, in my opinion. So the United States response from its allies, its traditional allies, the Fed wants this market to trade higher. So looking at this screen right here, lower high. I think the United States can only point the finger at themselves for so many broken to test support commitments, so many holds and concentration alongside. You know, in the end, you reap what you sow. Looking at the F2 screen, that's where we find ourselves. So the war news is kind of quiet. Not a heck of a lot going on. No news out of Europe. So the news volume-wise, calendar day is all focused on the United States. TPO-wise, industrial production. You can see that we've got a B. So on this screen, without news, manufacturing index called out of this 70.9. Capacity utilization at 79 above the balance point. So all those numbers would support modest economic growth. A little P, so you got a D, modest this year. So I mean the trade's the same. So 79 to 81. And that's kind of been the Fed's song since 2009. In fact, even on some of the Fed's projections, we're going to be going at 4% for a couple of years. We were this morning at least at 65-67 for buy two. The Scottish vote is 50-50 according to polling. This is a B. So English odds makers. Come back up and fail to take out the pretty good over there, plus or minus Scottish secession at 45%. I think that's the best trade structurally that we have. So my guess is that once they figure out tomorrow, PPI is called unchanged, core PPI after 10th, and then net long, all the post ties they have to England have to probably that yet, but none of that status quo moves the market. At least they know the animal that they're dealing with. So what does that do for us? Today's big news announcement, this week's big news announcement is the FOMC meeting on Wednesday. That tends to hold markets in check. Large players looking at the want fundamentals confirmed. They're willing to give up trade. Perhaps a little lower by a tick. Their play is directional. Essentially, trade location is not nearly as important to them as long-term direction of the market is lower. So they usually don't do anything until the Fed is interest sooner rather than the focus will be on when will interest rates. So we got pretty good support in this 23-24 area, and right now some people are saying that the first interest rate increase comes pointed for that. The tracker up above is 2015. So we'll be looking for language. Today we came into the market expecting resistance to be at 8 to 12. We thought it would hold up. It did. And that can swing the market. Right now the market is saying that the Fed is going to raise interest rates. So it's a really tough spot for the Fed to be in. And perhaps they're going to take.
So the F1 screen on the note says trading range.
A position of job owning and rhetorically supporting the market without actually having to do something.
On the F2 screen, you can see it's a pretty clear P.
What higher interest rates?
So I think we're in the same situation that we were this morning. Self-value
right now at
8 to
the
12.
current interest rates, which across the portfolio
and
are 2.5% plus.
I don't see how we get to the second
as opposed to the traditional 5% plus.
Without war breaking up with more intensity than it has. We've got support down here at 1, so we'll make 2 to 5%. Basically, I see a trading
interest
range.
Charges from 250 billion to
depending on what goes on in the mini this afternoon, we may have to pay upwards of 5
threefold increase,
and
hopefully 25% of the budget. And that's really why the Fed's going to have a very, very difficult time
30 area,
raising interest rates.
My guess is
looking at this structure, if we've got support in this 24
to 28 area, and I don't see any way to get to the second buy
down here where this low volume number is. If we're going to play this, you've got 29 to 4, so that's 8. If you add 8 to 4, that takes us up to 12. So we had to have pretty good selling 8 to 12. Right now, resistance is at 4, so the first sell is going to be 3 to 7. Very, very aggressive.
Okay, the nice thing about the bond is that when things get quiet, you can still make money trading supportive. And we had pretty
indexes, not so for financials. But it's not going to change much, in my opinion.
The market stopped.
And the second sell would be 11 to 15.
Right through our first
on the buy side,
which is too good short, but in this anywhere from
last
10 to 13,
down,
depending on how you took the trade.
Stopped at 31, and we're at 2.5. So
you had a shot at 8:30 seconds or
26 to 30 area would be buy one.
This is a
to
B.
get started. We'll make an adjustment after the news.
And the 10-year note was a D.
You're looking at 17 to 21 for buy two.
Reinforces the trading range.
But the focus will be the industrial production number
and
the manufacturing index will probably be lost.
So we got volume below time here, so this is a stronger B. Last rotate out stopped at 10. We're currently at 5, so we'll make 7 to 11, sell 1.
So we're going to take a trading range posture
15 to 19,
this week
sell
until the
2.
Fed speaks, and we'll come back
into our number 2 area. And we can give it a little room on the buy side.
Now, on Friday, all the play was in calls. They sold puts, liquidated puts,
based on
and they rolled that money into calls. So the protection, because the market has been sold, is being taken on the call side, not the put side. They've had massive put positions, and they're starting to take profits on those and then roll some of that money into the call positions. And again, it's
gold was very, very quiet today. Not much going on in gold
because the market is sold. They're hedging for outside surprises. And lifting some of their short hedge. Okay, looking at this market, the knob spread is basically at prices above 38, minus, depending on the day. It was up a couple of 30 seconds. I don't think you can read a lot into that.
On the buy side, we thought we could get these single prints.
So sell 1 is 37
minus 1,
and sell 2 is 11 to 15.
And
on the buy side, we got a low of 25, 26. So we'll make 23, 27 buy
and
1.
The FOMC
is going to lean against support.
To keep this thing
not a lot of magic there. Buy 2.
I think the surprise war news would come out of escalation in the Ukraine fighting.
3 to 7 for both contracts might be a little aggressive, but that's where resistance is.
That war is on the wane. Winter is fast approaching.
If you're an exchange member, their mindset is, well, the high is 5. I'm selling 4s if I'm wrong. I've had a 2-tick loss.
At least so they can heat their buildings in the Ukraine. I mean, winners in that part of the world.
I handle a lot differently than that. This is what is. This is the structure. This is where it is.
Ukraine. There's some talk
about lean against it.
Europe
and
pumping gas
if I'm wrong, I've lost a couple of ticks, and if I'm right,
Ukraine. Russia's got exactly what they want.
And that's not a bad way to look at the market. They don't take it personally.
They can step into the eastern Ukraine pretty much at will. go much past reality. They're not trying to read a lot into the market. What if this? What if that? This is what is, and this is what I'm going to trade. And like I said, it's not. Don't worry though. NATO's got 4,000 troops. Okay, you can see up here this 45 area. Any of the other NATO countries that is pretty good resistance. So we're at 36.90. We've rejected prices from 38. So for sell, I mean, it's just where resistance is. That's really is a stretch. We're selling against 40, and S2 will be selling against 45. What they say is they can't attack. Have single prints down here at 30. Last rotate down was 32. If the troops aren't there, maybe NATO 30 to 32. Respond. 1. Here's our 94 area and our 93.50. That's resistance. I think we're headed to that. We are headed down to the 12.17, 12.20 area, given a little bit of time, a little help from the news. Probably not on the buy side today, though. One news headline, probably more so out of it, escalation a little better. Russia and the Ukraine more so than the Middle East. I think the Middle East to the buck. And when you come back and look at it, I mean, how maybe we bomb Syria, maybe we don't bomb Syria. Well, their previous territory, Jeff, they're take us on. I mean, this empire. If they're going to get rid of ISIS, they need all the help they can get, and Assad has troops on the ground. Go in there and take those countries back. A couple of moderate Islamic groups that are fighting Assad have said that we've signed agreements with ISIS not to take them on. Obviously, they want to keep their heads. So it's just a mess, and you're not going to get there are so many cross currents and so many. And looking at the euro, such a difference in everybody's national interests, and it really is difficult to build a coalition and hold one together. Here we are, and you do that definitely before you make the announcement. So coming out and saying that we got a coalition and talking like it's already in, everybody tell you no. We stopped at 60 today, so we got ourselves a P, not the world's strongest. A lot of the problems that the administration faces is because of that. Okay, we've had higher lows, and you can see right up here that resistance is pretty much buy side level. So good selling at 75, which has been our number 2 zone pretty much. Pretty consistently. We spilled for 60. Last rotate up was 48, and we're at 28 right now. So this 35 to 45 area is going to be sell 1. Pretty aggressive. And then 60 to 70 will be sell 2. We like the short side of the market. When we left on Friday, we had basically 50 to 60 is the sell zone, and 75 to 85, and we made it up to 80, so you're able to get off. Folks, that's it for September the 15th. Half the month is gone. We'll see a bright make 10 to 20, let them take out that overnight high. 6:45. That's pretty aggressive. You have a great evening. This 29 area for buy too. Wichita with temps in the low to mid 80s this week. So this 29 area to catch out bright early in the morning. Probably a reasonable buy. But I mean, I just think you have to sell the euro every time you get a shot at selling the euro, because of the long-term problems that they have. That's a hell of a trade, getting off at 75 or at 28. Hopefully, like I said, some of you got that trade done. Okay, crude oil. The market is, and again, we talk about secure supply in Iraq. As long as the Sunnis west of Baghdad are cooperating and jointly fighting ISIS in that area, the Iraqi crude oil production is secure. If the Sunnis say, screw it, we're joining ISIS, then the Iraqi, the security of the Iraqi supply would come into question. And that's what we just have to key off of. So right now, ISIS has done such a great propaganda war against the West that even those in the Middle East won't join with them because they want to keep their heads. And you just don't walk into places that you've just overrun and start wantonly killing anybody you can get your hands on. Or you shouldn't if you want to lessen the fighting in your rear. So right now we're rejecting prices below 91. So our first buy is 75 to 91 even. And then our second buy is 25 to 50. I do think we're headed below 90 to get stops below 90. Nobody likes that, including our oil men in the United States. When they go look at how much they have to get per barrel to break even, the new crude that comes out of tight formations requires, depending on the formation, anywhere from 45 to 60 bucks a barrel to break even. So $100 a barrel per oil makes those guys happy too. One news announcement in crude and gold can send the market up in an explosive rally. You cannot trade these markets without protective stops. I don't like going home short from the U.S. session. I do like getting short in the London session. It's just a little bit safer play. But Europe seems to be quiet as far as the Ukraine goes. No one's added to their sanctions. The sanctions, actually a couple of items on the sanctions from the EU were tabled as to the timing of the implementation of such. So it's a fluid situation. Okay, a lot of commentaries out there on, Japan's market up or down, why isn't our market up or down, and the rest of it. So we may be in a little negative sentiment period on this contract right here. So we have rejected prices above 85. You can see that right here. These single prints are significant. And right now, we're not really doing much below 70. So we've got this 70 area, plus or minus, is pretty good buy one. And again, it's just leaning on structure. And on the sell side, the last rotate up here stopped in the 79.81 area for sell one. Sell 2, 85 to 87. And on the buy side down here, we'll make it 64 to 66. The news focus, industrial production, plus 0.3. That is the focus. Empire manufacturing will get lost. Oh, excuse me. Empire manufacturing's out first. I forgot about that. This is out at 9:15 EMI. I'll be out at 8:30 Eastern, and that's at 15.9. So that will cause a little news reaction too. Capacity utilization 79.3. No one pays attention to that number. In inflationary times where you have labor wages driving inflation, then they pay attention to capacity utilization, but not until then. So down to industrial production, plus 0.3. Increase in that is modest to moderate growth. So if it comes in like that, it will be supportive for the indexes. So I think we have a pretty fair shot of testing resistance in this 80 to 85 area. And then support is 65 to 70. Okay, take at least 15 minutes to get everything up and posted. I'm going to get busy on that. I will see you as soon as possible. There'll be comments in 18 minutes when the Empire Manufacturing Index number hits the market. With you as soon as I can.